If you stay with me until the end of today's episode, you'll understand why everyone is suddenly talking about SpaceX, why Wall Street was creating investment products around a company you couldn't even buy yet, and what an ETF actually is.
Intentional, with the money. What do you do with the money? Make it move, make it make sense, make it make sense. This is rooted, we on record.
This is What the Money. I'm Dr. Cece Anthony, and around here, we don't just talk about money, we make it make sense. All right, let's start with What the Money. Today's article talks about something pretty interesting. Wall Street is already creating investment products around SpaceX and its IPO, initial public offering. Now, if you've been paying attention to the news, you've probably heard of SpaceX. They're launching rockets, sending satellites into space, working with NASA, trying to change the future of transportation and communication. And investors like me are fascinated by it. So fascinated that Wall Street is creating investment products designed to let people bet on whether SpaceX will eventually be worth more or worth less. Now, here's the funny part. SpaceX wasn't even publicly traded. You couldn't just go buy SpaceX stock the way you buy Apple or Microsoft stock. Yet investors were so excited about the company that firms were already creating ETFs tied to the idea of SpaceX and its future performance. And that's what caught my attention. Because every time a company becomes popular, people start looking for ways to invest in it, sometimes before they even understand what they're buying. And that's where people can get themselves into trouble. Because investing based on excitement is very different from investing based on understanding. Now let's talk about something else that jumped out at me. The article didn't just mention SpaceX. It mentioned leveraged ETFs. That's another term people hear and immediately think, that sounds like something only rich people understand. Not at all. We're going to unpack that today as well. But first, why is Wall Street doing this? Because Wall Street follows demand. Investors are excited about SpaceX. Excitement creates demand. Demand creates products, sometimes before the company is even publicly available. That's fascinating to me. It reminds us that investing isn't only about companies, it's also about investing or investor behavior. Remember we talked about emotions in a previous episode? Well, understanding investor behavior is just as important as understanding the investment itself. Now, let me put this on record. As an advisor, one of the hardest conversations I have isn't about money. It's about patience. Everyone wants the next NVIDIA, the next Apple, the next Amazon, the next SpaceX. Nobody walks into my office asking, Cece, what's a well-diversified portfolio? They want the new exciting thing, the headline, the rocket ship, literally. But investing has taught me something. The investments making headlines today usually aren't the ones quietly building wealth for decades. Wealth is often boring. Headlines aren't. That's why I always tell clients, never confuse excitement with strategy. Understand first and invest second. And don't let your emotions dictate your investment strategy, which brings me to another thought. Sometimes people hear me explain the markets, how stocks move, how bonds work, how interest rates affect investing, how emotions drive markets, and after all that, they look at me and ask, so I'm not going to lose money, right? And I always smile because we've already talked about this. And I gently remind them, remember what we discussed? There are no guarantees in investing. Markets go up, markets go down. That's investing. Now, there are financial products designed to provide guarantees, and I absolutely want to spend an episode talking about those in the future. But today's episode isn't about guarantees. It's about understanding how investing works. Because once you understand that, you stop chasing certainty and you start building strategy. When someone comes to me, my job isn't to predict the future. My job is to understand you, who you are, what are your goals, what does your life look like today, what are you already doing to build wealth, Who do you hope will benefit from your wealth one day? What kind of lifestyle do you want in retirement? And only after understanding those things can I begin recommending a strategy that fits your situation. Because financial planning isn't a one size fits all kind of deal. It's deeply personal. And that brings up another question I hear all the time. Why should I even work with a financial advisor? Some people believe they can do everything themselves. And you know what? Some people absolutely can. But for most people, they're already experts at something else. They're physicians, attorneys, teachers, engineers, hospitality professionals, small business owners, retail managers. Parents, they're busy becoming exceptional in their profession. They don't have hours every week to research stocks, mutual funds, ETFs, bonds, insurance, tax law changes, retirement legislation, estate planning, Social Security, healthcare planning, and then somehow put all those pieces together into one coordinated financial strategy. Think about it. Your financial life isn't a one size fits all puzzle. It's a 1,000-piece puzzle: retirement, taxes, insurance, investments, estate planning, cash flow, healthcare, college planning, business succession, charitable giving. It's all connected. A good financial advisor helps you step back, see the whole picture, and organize all those moving parts into a strategy designed around your particular goals. Most advisors generally care about helping people improve their financial lives, just like most physicians genuinely care about helping their patients become healthier. Are there exceptions? Sure, every profession has them, but the overwhelming majority of advisors worked hard to earn their licenses, maintain them through continuing education and compliance, and build long-term relationships based on trust. Because our success is tied to yours. When you reach your goals, that's a win for everyone. Which actually leads into another topic I think deserves its own episode. How do financial advisors get paid? Fee-based, commission, advisory accounts, brokerage accounts. What do all those words actually mean? We'll break all of that down in a future episode. Because I think once people understand how advisors are compensated, they'll feel much more confident asking the right questions before choosing someone to help guide their financial future. Now, let me make it make sense real quick. I'll make stocks quick because we talked about them in episode 2. A stock equals ownership. When you buy stock, you own one company. A small part of it, pretty simple. But today's article wasn't really about stocks. It was also about ETFs. So let's spend our time there. Now, an ETF is different. ETF stands for Exchange Traded Fund. Think of it like this. A stock is one ingredient. An ETF is the recipe. A stock is one player. An ETF is a team. Instead of owning just one company, an ETF may own dozens, hundreds, or even thousands of investments bundled together. They are similar to a mutual fund. One purchase, many holdings. That's why ETFs have become so popular. They allow investors to gain exposure to an entire group of investments without having to pick every individual company themselves. And that's why today's article matters. The article isn't really about rockets. It's about how Wall Street creates investment products around themes investors find super exciting. And before you invest in those products, you should understand what you're buying. Instead of buying Apple, Microsoft, Amazon, Google, Tesla one by one, someone created an entire basket. Now investors buy the basket. Why? They're called exchange traded funds. Well, they trade just like stocks. You can buy them, sell them, watch their price move throughout the day. But inside that one investment, there may be dozens, hundreds, sometimes thousands of investments. And diversification, don't put all your eggs in one basket. If I send you to the grocery store with $100, would you spend all $100 on bananas? Probably not. You'd buy several different things. Investing works the same way. So today's article isn't really about SpaceX. It's about understanding the vehicle you're using to invest. Because sometimes people think they're buying one company when they're actually buying a fund. And sometimes they think they're buying a fund when they're actually buying one company. Those are two completely different investments. We'll talk about leveraged ETFs soon. Those are a completely different animal. You can find the article at the center of today's episode on the feed of my website. This podcast was created for the people who were never taught but always capable, for the ones figuring it out in real time, for the ones building something out of nothing. This is where confusion gets replaced with clarity, where money stops feeling intimidating and starts feeling intentional. I'm Dr. Cece Anthony, and this is What the Money. Thanks for listening to today's episode of What the Money. I hope today helped you better understand ETFs, stocks, initial public offerings, and why the excitement surrounding a company like SpaceX can send investors looking for other ways to invest before the company's stock is even available to the public. If you enjoyed today's episode, make sure you like, follow, comment, share, and if you're watching on YouTube, subscribe. All the little things help the algorithm push this content to more people so we can continue making financial education accessible, relatable, and real. And if you have a question about money you would like answered on a future episode, you can send me a direct message from my website. Your question may be featured on the show. Stay rooted, grow intentionally. The opinions expressed herein are for general information only and are not necessarily the opinions of Osaic Wealth or its representatives. It is not intended to provide specific advice or recommendations for any individual. Please consult your financial professional, attorney, or tax advisor with regard to your individual situation. Securities and investment advisory services offered through Osaic Wealth Inc., member FINRA/SIPC. Osaic Wealth is separately owned, and other entities and/or marketing names, products, or services referenced here are independent of Osaic Wealth. Osaic Wealth does not provide tax or legal advice.
Yeah, yeah. Yeah, with the money, what it do? Break it down, make it move. If it's talking, we translate. Make it make sense. This is rooted. Let me put it on record. With the money, yeah, we watching how it's moving. Make it make sense. Yeah, we breaking down the message. Stay rooted. Grow intentional. With the money, what it do? With the money, make it move. Make it make sense. Make it make sense. This is rooted. We on record. Nothing moves alone. Yeah, it's all connected. Check the pattern, then respect it. What you plan here shows up later. Small steps now turn into acres. With the money, yeah, we watching how it's moving. Make it make sense. Yeah, we breaking down the message. Stay rooted. Grow intentional. With the money, what it do? With the money, make it move. Make it make sense. Make it make sense. This is rooted. We on record. Nothing moves alone. We feel the truth. Every choice got roots and proof. Stay rooted. Grow intentional. What the money? What it do? What the money? Make it move. Make it make sense. Make it make sense. This is rooted. We on record.